So an expensive day for many investors, looking forward as a Trump White House takes aim at our biggest trading partner, China. What will his presidency mean for Australia? For more, I'm joined now by Chief Economist at AMP Capital, Shane Oliver. Dr. Oliver, let me start with markets. The S&P 500, as Carrington was saying, the futures at one point were down 5.6%. What do you think is going to happen to markets in the next couple of days?
Well, that's a good question. Interestingly, they were down at 5% around 4 o'clock, and recently, just a little while ago, they were down 1.5%.
Why was that?
I think it's because investors sort of saw Donald Trump's election night speech, which was somewhat conciliatory. And so investors are thinking, yes, this has injected a lot of economic uncertainty out there, particularly regarding free trade globally. But by the same token, if he can be a bit more pragmatic, a bit more conciliatory, then maybe we'll give him the benefit of the doubt and see which Donald Trump we get. Do we get the Donald Trump who's pragmatic and wants to generate the economic growth and prosperity the Americans want to see, or is he the populist who goes down these simple, simplistic, silly solutions like stopping free trade?
Now, we seem to have ourselves a known unknown here, if I can use a famous Americanism. We know now who the president is. Do we know much about, crucially, his advisors, his economic advisors?
Well, we know very little about that. I mean, if it's a conventional Republican or Democrat president-elect, then you can pretty much bet on who those advisors will be. Trump's advisors, I think, will be outsiders. Or at this stage, that's what they look like. But that will be a key thing to watch. And
will they be from the big end of town? He doesn't really like Wall Street, does he?
No, and he's certainly not part of the establishment. So it'd be interesting to see how he goes on that path. But I think at the end of the day, he will want to shore up confidence. He doesn't want to cause a massive economic shock here. Otherwise, his constituents, the people who voted for him, are going to be very upset. And so he has to deliver some sort of economic stimulus for America. He has to get those tax cuts through. He has to put through some sort of infrastructure spending program, which he's promised to do. If he does those things and deregulates, you can get the sort of Ronald Reagan-esque type boost to growth. If alternatively he goes down some crackpot solutions, really hard hammering China, then the danger is he could actually make it worse for people.
Is that your worst case scenario?
That's certainly my worst case scenario. Because don't forget, a lot of Americans are upset with the way things have panned out here. Rising inequality, declining real living standards and stagnant wages. But if you slam up imports from China by 45% in price, what's that going to do?
Which he's threatening to do.
That's what he's threatening to do. What's that going to do for the average American worker? They'll actually be worse off. It won't bring the jobs back. The jobs will just go to Vietnam.
What's it going to do to our commodity prices, do you think?
It won't be good for China, and China will just retaliate. You'll have a tit for tat. Risk is global trade war, and Australia will get caught in the middle.
Right.
With lower commodity prices and obviously less demand for our products that we send to China for making into widgets that can then go to the US. So I think that's the risk for Australia. That's why our share market sold off. Looking
at the Fed and the prospect of a US rate rise, what do you think the chances of a rise are, say, in December?
Well, interestingly, the market was pricing at about an 80% probability of a Fed rate hike in December this morning.
Yes.
And as the day wore on, it went down to about 50%. So obviously, investors are thinking, well, will the Fed actually raise rates when there's this much uncertainty around? And I think it's now a 50-50 bet as to whether they will. Probably slight leaning to think they probably will. But if this uncertainty lingers, then I think the Fed will delay.
Donald Trump has said that the US economy is in a, quote, big, fat, ugly bubble, and he's warning of a major market crash if rates rise. Do you think that will happen?
It all depends on how quickly they rise. And I think at the end of the day, yes, we've got very low interest rates in the US, close to zero. We've had money printing, but the US share market is nowhere near the bubble that it was in the year 2000.
I mean, could you see a global recession as a knock-on of a Trump presidency?
It could certainly be a risk, but I think it's got more to do with his policies in terms of protectionism. If he pushes hard on that front, that could cause a knock-on recession globally. But if he takes things a bit more slowly on that front, a bit more debate and discussion internationally rather than pushing hard, then I think he could avoid a recession. And of course, his policies in the US are somewhat stimulatory and they could help things over time. But again, he doesn't want to push interest rates up too quickly because that would, as you say, that could threaten the US economy. So it's a difficult balancing act that he faces here. It's nowhere near as simple as he's portrayed it through the election campaign.
Now, Shane Oliver, how could the market have got this so wrong in terms of pricing in a Trump presidency? I think the probability I heard of a Republican-controlled House and Senate, the market priced at 4%.
Yes, good question. And it's now twice in a row because Brexit
Well, exactly.
was exactly the same. I think it just has, I mean, in theory, markets are forward-looking. And sometimes they get things right, sometimes they get them wrong.
But it was wrong in Brexit because the polls were wrong, but more importantly, the bets were wrong because the heavy money was on the Remainers, but more bets of lighter amounts of money were on the Brexit. Now it seems to be the same sort of thing.
You may have seen exactly the same thing here. So there's a question mark about the opinion polls. Lots of money being spent on opinion polls. That was wrong, and a lot of investors or analysts were basing their analysis on the back of those opinion polls. But perhaps there is a broader issue here, that all those people on the Beltway getting good salaries, good jobs in successful industries, that they're sort of missing a wider picture here, this angst amongst ordinary people about rising inequality and stagnant incomes. And therefore they miss it because of those reasons. So I think it's a bit of both. At the end of the day, whichever way you cut it here, we have to do something about, or America certainly has to do something about rising inequality, and it has to get decent growth for ordinary Americans.
Indeed. Theme of the night, and what a night. Shane Oliver, thank you very much for joining us.
My pleasure.